warm welcome to everybody out there in YouTube land. Happy to be here today with y'all for the Tackle Trading Halftime Report. We got everybody here. Like literally, it's like everybody's here. We got Mark, we got Matt, we got Gino, we got Slawick, and Cody and myself. We're all here. How you doing today, Matt?
Matt is on mute myself. I'm doing good. I'm not doing better than Ricky. The monologue yesterday was absolutely fantastic on the Golden Globes, and I just hope you can do as good a job as he did opening the show.
You know, if we give you good feedback, just take it. No pontificating, no waxing political. Just take it and run with it, right?
Yeah, his method was make fun of everyone.
That was genius, by the way. Absolutely genius. And it still feels uncomfortable. Like, you know, all these hours later, just watching people's faces and responses in that.
I watched his monologue probably 6 times last night, just laughing the entire time. It's hilarious.
It was very, very funny.
The only thing I watched more than his monologue this weekend was the Titanic theme music to the Patriots losing.
That was a good one too.
I did watch that.
So the reign of terror is over.
Oh, so Patriots lost. The Eagles lost. So Matt, I've got to send you a Seahawks hat.
Yeah, but you just hired Mike McCarthy as your coach, so there's that.
Yeah, we'll see.
Well, obviously, guys, we got a lot going on in the news today and over the weekend. Increasing tension in the Middle East with the drone attack that happened over the weekend. Obviously, oil spikes, defense stocks. We got to talk about this. First and foremost, guys, obviously, the heightened political sensitivity over this issue. Just want to really kind of talk about it from a market perspective more than anything, because I want to get your take on a report I read today. Since 1990, there's been about 19 different escalations in the Middle East from a military perspective. Okay. In that 19 different times, we've seen the S&P 500 rise in that environment. We've seen oil rise in that environment, and we've seen defense stocks outperform all of them in that environment. How are you approaching this from a financial perspective? Let's start with Noah.
Well, my first thought was check oil and the defense sector stocks, and they both just popped up. I mean, starting out with oil, it's the very first thing that crosses my mind. Anytime anything Middle East tensions start to rise in any way, shape, or form, you always go check your oil charts. And sure enough, it popped up, closed up above 62, and we're continuing, even today with the little red candle there, it still has higher highs and higher lows. So we're in pretty good shape there. And then we've got, the defense sector stocks like Lockheed Martin, for example, popped up and, gave us a really, really just energetic, not strong symbol. Let's try that one more time. A lot of energy popping up on those. Really, big pop, from 400 up to 417 at the highs, really good size pop. And then price of precious metals also going up. Those were the big 3 things that I saw the market responding to was defense sector, oil and precious metals.
Mm-hmm. Let's first take it from an S&P 500 perspective. No, kind of give me a breakdown technically on what we're seeing. Obviously, we all woke up to the news headlines today, but it's so funny. There's headlines I saw across 3 different websites today. Market down big, and it's like down 0.5%. Like they just report these numbers on the Dow, like market down 170 points on the Dow. And I'm like, that's like a doji at this point in the market, where the market is in relationship to price. Obviously, the market tested that support level, that intraday support level, Noah, recovering a little bit intraday here. Can you give us that breakdown from a technical perspective?
Well, it's a fantastic breakdown, Noah, even though you're on mute.
Hey, by the way,
it's a beautiful support bounce at 32.10. I'll just say that.
Yeah, well, look at this. So you just kind of go back play by play. So you got the news of the drone strike breaking, and the market sells off hard overnight. And by the time you get down to the cash open in the US, though, or not even the cash open, it started to rebound before that. So it came down and it kind of retested that previous low in that 3,200 zone, like you guys were mentioning. And then at the cash open, the market recovered half of what it had given up overnight. And then, over the weekend, you got a bit of a gap down. And I watched this very closely last night because I was concerned that the market might continue to sell off. So I stayed up late. This is one of those nights where or days where I'm coming off of staying up watching the futures too long, because I wanted to see how the market behaved. And I saw it selling off overnight as the European markets opened, but then I watched it come back down to that same 3,200 level. And once it held and started to run back up, I'm like, oh, cool. I'll set alert and went to bed and watched the cash open first thing. And then boom, I knew right at the cash open with that first candle up that the market was going to, recoup what it had gapped down. And here we are right next to the close from Friday. So we're really, at the end of the day, wasn't that big of a deal. Basically, we're right back where we started at the end of the year.
And I want to talk about that because I was there for the futures open as well, because I mean, whenever you see this type of increased tension geopolitically coming over the weekend, that futures open on Sunday night is so important for, gold was up big, oil was up big, dollar was down, S&P down a little bit. But we've seen kind of a revision to the mean since the cash open today. You've seen the market recover the losses. Gold has came back down a little bit. The defense stocks have came back down a little bit. Mark, are we not pricing in the potential risk to this geopolitical situation increasing?
I don't know about that, but the price action to me is very, very common when you have news event type things. You get reaction, sell off, and then rally. I mean, how many times have we seen this in the last 5 years? News event, sell off, rally. I mean, it is so common. This is exactly what I expected to happen from a daily chart perspective. Because what happens? The second you get a reversal signal, all your short-term shorts that were selling the news event, they close, and then day traders come in. Overnight traders come in, and it's just very, very, very common. What it tells to me is that there is only apprehension. There's no real fear at all, zero. Or you'd see, you saw real fear. You've seen real fear with the trade war over the last couple of years when you've seen some really prolonged multi-day sell-offs. That didn't even come close to happen. You had a couple hours last. You are a trading nerd when you are set, Sunday, I got to check these things at about 5 o'clock. I need to see what's happening, because, it's like theater, it's like theater, seeing how the market will react. So are we appropriately pricing them in? I don't know if a prolonged war, even if that occurs, is bad for the market.
Well, it's like I go back to that study I read today, Mark, of the last 19 conflicts that you could say was increasing tension in the Middle East since 1990, and this includes multiple different hot wars in Iraq in that time frame. The S&P 500 in the next 6 months following the increase in tension is up 3.3%. Oil's only up 1.5% in those situations, though, and I was a little surprised by that. I want to get Gino's take on that.
Well,
Gino,
let me tell you, Matt, on Friday
ahead,
when you weren't here, that's what we talked about for about 35 minutes, Cody, myself, and Frank, about how historically war is not bad for the market. And so when you detach yourself from the emotions, your opinion, and just look at how the market reacts, we spent, on that exact point. So
yeah,
you don't need to go read those 19 studies. Just listen to the halftime.
Just listen to the halftime report on Friday. Obviously, I missed that. Gino, what's your take on oil right now? Obviously, we popped on Friday, popped coming into the Sunday open, seeing a little bit of a sell-off here. What's your read on oil, Gino?
Yeah, just like Mark said, apprehension, a little bit of fear. But, look at the technical charts. If you didn't look at the news, you'd still be playing the charts the exact same way you did before all this news started. It's a buy on the dip right now. I got my internals bullish, S&P setting up. Gold, oil, those are the kind of things you do out of the money. Put or call spreads, cheap spreads, in case it does escalate, but you don't over position size on them. You take a small position, and sometimes it pans out, sometimes it doesn't. I think this oil attack thing's been kind of built in before the attack because oil's been trending up. A little more bullish with more volume than normal. And believe me, a lot of oil people knew about this way before the attack even happened. So we are so far behind the news on this. Here in California, Matt, when you said oil,
that's Gino's hot take. Iraq didn't know the attack, but oil futures traders, they were in on the.
Oh yeah,
the insiders.
You know, I'll tell you what. Somebody knows what's going to happen before the tweet comes out.
Listen, I know that's a little bit of a joke, but I think there's some truth to that to a certain extent as well. Mark, you and Gino both were talking about detaching our emotions from the politics of it, from the emotion of it, from the belief. We all have our internal beliefs, right? Every single one of us have our own internal beliefs. We have our political beliefs, our religious beliefs, our community beliefs, our financial beliefs, our economic beliefs. How do you get to the point where you can truly detach the emotion from this, though? Because we read those headlines, we see what's going out there geopolitically wise, we see some of the nonsense, but how do you truly get to the point where you become that cutthroat market assassin, where it's not about the news, but it's truly is about just the price action? Because that's easier said than done.
Of course it is. And oh my goodness, I mean, how many hours could we discuss that? I mean, that is a thought-provoking and maybe the most important thing you'll hear in the next month as a new trader out there. What Matt said about how do you get to the point where you become a market assassin? How do you get to the point where everything that is you from a belief structure, you set aside? For me, the process, and it goes way back because, you know, I've been involved in gambling, probability analysis my whole life.
Mm-hmm.
For me, it is a sincere, deep, spiritual, religious, emotional foundation of being committed to objective reality. Like, you have to, when something occurs, be able to analyze that independently of whatever you think. What's great about trading is that if you become a chartist and let price action be the king, be the motivating factor in all of your decision makings, you take this quantum leap to being able to do just that, to be committed to objective reality. Because the chart, the price, it's pure. The chart, the price, it is devoid of emotion. The chart, the price is absolutely one of the purest forms of analytical based decision making that you could ever do. But you have to separate yourself and just purely go off price action to do that. And you've taken a gigantic leap.
It's again, I agree with everything you just said. I'm gonna bring Slavik in here. Slavik, how you doing, buddy?
I'm good. What's up, guys?
Hey, it's good to have you on the halftime report here today, Coach Slavik. Slavik, same question to you, right? You've been a trader for many, many, many years now. You primarily day trade. You're also a politically motivated individual, and you have your beliefs as well. How do you separate yourself from some of the realities of what we're seeing out there right now? Because I mean, all across the financial headlines today, across CNBC, across FinViz, across Seeking Alpha, across Briefing.com, every financial news source today, they're talking about geopolitical situations. They're talking about politics. They're talking about, you know, Nancy Pelosi and Donald Trump and this and this and this and increased tensions and how's Iran going to respond to this? And obviously, we're here to really kind of study the financial world. But these things have real impacts on price. How do you go about, you know, segmenting yourself so that you can just be that, you know, that you know, like Mark said, and what I've said many, many times, that market assassin, where you just focus on price and it's not about the beliefs out there?
Well, first of all, we all have to know what's going on in the political world, because it's, like I said, in pre-market, it's all interconnected, correct? But I try not to read the news. It was brought to my attention on Friday morning by Jared in my room to why the futures were down, because I didn't know. I was driving for 16 hours and we didn't listen to the news. The worst, like speaking of, becoming an assassin and stuff, or cutthroat killer trader, every single time, that's for me, every single time when I come to the market with the bias, I'm losing the day.
I agree.
You have to watch what's on the screen, and that's what's on the screen should be dictating your what you be doing with your money by putting it at risk at certain instruments. Every single time, like today, Roku, I came to the market with the bias, and I didn't even consider trading Roku to the long side. And look what happened intraday to Roku, 4.5% to the upside. So the second you come to the market with the bias, that's how you.
It has a tendency to teach you a very valuable lesson when you bring your beliefs into the market. I'll tell you, there's been many situations in my life where I've missed out on an opportunity because, and not because of the politics, because I'll talk politics. It doesn't bother me. I love having conversations on it. I'll talk with people I agree with, people I disagree with. Just love having those discussions. But I'll tell you, Noah, and I want to get your take on this. I do struggle sometimes economically because I study so much economics that has an impact on my projections, when even in the face of the technical reality, I'm like, this doesn't make sense economically, though. How do you get to the point where you just stop thinking and start acting? Because that's what we really need to get to, is where, yes, we see the headlines, but it doesn't impact the way we approach the market.
Well, I mean, I have those same questions because, from an from fundamental perspective, the market can seem quite disconnected.
Oh, absolutely.
We've been saying, time and time again, to hold your nose and buy. And that's because your bias, the market doesn't care about your bias, right?
Yeah.
So, to help me manage that, I light an incense stick or two.
Well, just to kind of go on that just real quick, Noah, in 2019, we had a zero growth earnings environment. We had stagnation from around the world from an economic perspective, and the market had what I think we can all consider a pretty historic year.
Very historic year. But if you looked at it from a purely fundamental perspective and you listened to the wrong crowd, like the perma,
you missed out on it.
You missed out. Not only that, you probably got your assets handed to you. So, it's one of those things where I'll come back to something that's helped me a lot is trust your process and your stop losses, not your bias.
That's exactly right. In fact, you guys all summed it up. Like I was saying is, I was like, okay, weekend, check the futures. Wow, we're down. How's this going to open? And how is it going to play out the first hour? And, I first thing I did is what judges your bias? What is your main influence? What you got to do is, your whole life, you grow up with the news around you, people's opinions. The biggest salesman has the biggest influence, right? Well, what happens is you got to break out as a trader is your primary information source and influence has to be the chart. Has to be the chart. And that's what the education comes in. And like Noah just said, like Mark said, I went to my charts, I looked at my channels, and I said, well, if oil triggers above 65, like I've had my line there since August of 2018, and it didn't hold that from the last tack. It didn't break that from the last tack in September, and it didn't break that in April of 2019. So really, until that resistance is broken, it's not that big of a deal. It's got to break above 65 for me to see it. It hit almost there, top 64. Last attack, it jumped 8 points. This attack, same oil field, same area.
I'll tell you, Gino, I'm glad you brought up that attack, the one that happened in Saudi Arabia when we saw oil spike the last time. You guys remember that a couple months ago?
Yeah.
When we saw a 10% increase in the futures market.
Yep.
I'll tell you, I got a little hesitant on oil coming into the futures market and into Monday today, just given the fact that the last time we did see this, you had that massive spike, but then we saw that sell-off as people started realizing that oil production wasn't going to be impacted that much. And I just come back to just this study that I was reading about, and Mark, obviously you did a great job on the halftime report on Friday, but in the last 3 decades, 19 times, defense stocks are up in the next 6 months, 6.7% on average. The S&P is up 3.3% on average, and oil is only up 1.5% on average, which was, again, a little surprising to me. But when you look at it, that has an 80% probability. And when you're looking at Northrop Grumman, when you're looking at Raytheon, when you're looking at General Dynamics, when you're looking at Lockheed Martin, all of those saw 8, 9, 15, 16, 17% price appreciation, with close to 80 to 90% of the time in those 19 times. That's some pretty decent evidence of historical nature that these type of tensions, although in the headlines all over, doesn't have that big of a market impact outside the defense stocks.
Right. And so that's what I say. I'm doing small positions until I see something different on my charts. No reason. I don't have to change any of my trend lines. None of my trend lines changed. My triggers above 65 haven't changed in oil. We're in a W pattern, which is bullish. If it breaks out of the 65 trigger and that kiss of death area that we did back in 2018 at 65, there was a M breakdown. I'll tell you, that's when you go, okay, now we're willing to pay prices we haven't paid in a long time on the chart. Whether it's oil being attacked or some other influence, maybe just people buying oil, whatever it is, whatever triggers that makes you change your plan. But if I don't have to move my trend lines on the chart and I don't have to move the trend, or there's no big outside the Bollinger Band type thing, then I have to stay the course and keep the same signals. One thing I do, Matt, though, is when the political tension hits is, are you playing speculative emotions? Like, oh, here comes oil again. You know, it's kind of like same thing. Trends over 2, the trend indicator's over 2, market's going to bounce tomorrow. Not every time do you go all in. No, you just, you know, when you have that, like Mark said, when you're kind of uncertainty about, is this going to escalate? I play the game, but play small positions, you know, and that's where you feel like just make the quick decision. How much are you going to allocate if this happens? You know what I mean?
Well, I do think, just to kind of go on that real quick, Gino, I do think that one of the reasons everything kind of came back down to normal here today, because we saw the spikes. Yes, we saw it on gold, we saw it on oil, we saw it market down a little bit, is because we don't know exactly what the Iranian response is.
That's right.
Right. And I think the market's waiting to see kind of, I think the market believes that there will be a response, but what type of response is that going to be? I think there's just kind of a wait and see approach here. I do want to talk about gold real quick with you guys, because before this was even happening, we were starting to see bullish indications into gold. And when you start to see bullish indications coming into gold, it's usually because there's a little bit of fear out there. And that was before we started seeing all of this. Gold pricing in at the highest level it's done since 2013 now, guys. What's your take here on gold? I want to start with Mark first from the fundamental perspective, and then I want to bring it to Noah from a technical.
I covered this extensively for pro members in the Commodities report this weekend. Talked about the big fundamental driver of gold. And that fundamental driver in 2020 is much the same that it was in 2019. It's the Fed. It is this very loose, dovish monetary policy, not just in the Fed, but around the world. So we have this huge fundamental driver that exists. Now, whenever news breaks that creates fear or apprehension, that's almost always positive for gold, right? So you have this technical base of solid price action, solid floor that's existed for months. You have this huge stabilizing driver. Anytime you add a catalyst to that formula, then you can see upward price appreciation. I mean, it's the same exact situation that occurred last year at the start of the year. Huge fundamental base with loose monetary policy, stable price action, and then what happened in the summer months? Trade war. So that formula of price stability from a technical perspective, a huge fundamental driver, and then you get a catalyst. Summer it was trade war. This past Friday, it was escalating tensions in Iran. That formula can be really good for trading, and it only adds. News almost always adds to the sentiment of bullish positions. Very rarely, outside of economic data or federal shifts in policy, you get negative news that impacts on gold. Surprise news is almost always bullish for gold.
Yeah. I mean, the reality of the situation, guys, is take, and not a great candle today, but take whatever the news was. Could be a random things, could be economically, could be Fed, could be geopolitical situations as we saw today. But gold was running in front of that, right? And I heard Kramer talking about gold today, about how gold being up 9 days in a row is not a positive thing for the market. And my first response was, well, gold had a pretty good year last year, and so did the marketplace. They both can run together. No, from a technical perspective, we are breaking out on that daily chart. We're a little bit, well, not a little bit, we're fairly overextended here. The weekly chart also breaking out of that resistance level. What's the technical breakdown on gold right now?
Before we get Noah's take, what year is Kramer living in? Does he think it's 1994?
I was a little surprised to hear that analysis, because it was like that ran in the face of everything last year.
The correlation between gold and market price is almost non-existent these days.
Yeah.
The Federal Reserve is driving both markets.
Yeah.
Like, come on, Kramer, you're better than that.
I agree. I think with what the Fed's doing and the geopolitical situation, I mean, the Fed's driving them both. I agree with that 100%. No, technically speaking, we gapped out, we ran, we ticked at 1590, now coming back all the way down to 1566. We could even test that breakout channel between 1550 and 1560. Give me the technical breakdown. You're on mute again, Noah.
Well, what you missed was the best part about what I was going to say.
The
momentum is what the first thing I noticed. I mean, it breaks out and you get this really steep, almost parabolic move. Not almost parabolic. That is how I would define parabolic. And anytime you get that kind of steep momentum, a short-term pullback is really common to follow up after you get a really steep move like that. From a weekly perspective is where I like this chart the most, because this was about as pretty of a bull flag as you'll see. I mean, if you're writing a textbook on what you want a bull flag to look like, that's it. Nice, strong run up. You got to pull back down. You got a clean support zone here at 1450, and then boom, right back off to the races. I think you're in a situation here where you could probably buy the dips with confidence just because of that increase in momentum. After you get an increase in momentum like that, you'll get a pullback, but it's usually followed up with another run. Now, again, things could change, but I don't really see the Fed's changing monetary policy. I don't see them not printing. I don't see them not increasing the balance sheet. I don't see them not QEing. Is that right? Not QE?
I think we'll be 5 trillion by the end of the year.
Well, so I see that this is an opportunity, a very clear signal. And, this is just kind of a fun chart to look at for a couple of things. Like I got moving averages on here. You can see where the price has come down below the short-term moving averages and then cross right back up. You got a pretty clean signal where it breaks above resistance as all the moving averages are crossing up. And, I got a classic indicator down here, the old MACD, which gives you that, little buy signal after a pullback on a deeper pullback like that. And I don't always use the MACD, for confirmation, but it certainly supports that, hey, what comes down starts to head back up. And again, with that kind of energy and momentum, I would be looking for a retest here in the 1550 zone and watching for signals and setups if you miss this first run.
Well, and just, on those weekly charts, kind of over the course of the last, 2 types of price movements here, Noah, you first went from 1180 all the way up to about 1340, about 160 points. Then you go from 1270 all the way up to 1550. You have increasing momentum in that trend. You got a ways to run here still on gold, in my opinion, technically.
Even the Elliott wave analysts will find this chart appealing because you've got
the Fibonacci crowd would love this.
I was going to tell you guys the Fibonacci.
I was waiting for Gino to drop it.
I got targets up there back to the highs, and that's kind of scary. Wondering why would we go that high? But yeah,
why wouldn't you?
Because the Fed has lost its bloody mind.
Yep, they're loading up on it. So the momentum was the key thing, Noah. That's a good point.
Yeah. So, I mean, that increase in momentum, that's typically a good sign of a third wave. So you get that first one, that's always a good move. That third move, that's the 1, 2, 3 of an Elliott wave. That usually gives you another run up. And even like classic Elliott wave models will give you a target similar to wave 1. So you'd expect this out towards that 1650 ballpark. And then the extended, if you got another big momentum run, you're out at the all-time highs. So, it's not that far off of that. And I can see that. And, whether or not you put a lot of stock into Elliott wave, that probably doesn't matter. the reason I think it's become popular is because the pattern is, I think, really deeply tied into psychology. I think it's kind of human nature where you get a lot of momentum and greed driving it. And then you get profit taking, and then people see that, you know, man, that gold's really, really running, and they see it start running again. You'll still see people piling in, and prices will continue to rise, just as demand. Because I mean, when things start moving, people start talking about it, and there's always late adopters coming into the trend that keep it running longer than you expect.
Yeah, no, I think that's such a wonderful point on momentum because, yeah, we can all draw Elliott wave and we can all draw our Fibonacci's, but I think it's really the momentum that really kind of carries that through to the next wave. And as long as you have the momentum, you're looking at being a buyer here. I do think it's important to keep an eye on 1550 here in the market. Very quickly, guys, great conversation for that.
Let me interject here. I got a little news update. We might have the first World War Twitter in the history of
World War Twitter.
And I'm coining that. If no one ever has coined that out there, that I am coining
World War Twitter. That's you, buddy.
President of Iran just tweeted, those who refer to the number 52, which is what Trump tweeted as far as the targets in Iran, should also remember the number 290, referring to a passenger plane that the U.S. shot down 30 years ago, the number of casualties on that. And then he says, never threaten the Iranian nation.
I'm telling you right now, I do believe Iran is going to respond to this.
I mean, it's World War Twitter right now. And I mean, it's
hopefully we see a de-escalation from it. Hopefully it's just two trolls trolling each other on Twitter. Let's just hope that's what it is. Okay. Let's wait to see the actual response to it. I do have some stock news very quickly, guys. Had some upgrades, downgrades today. Apple got downgraded from somebody for some reason. Somebody tell me why somebody would downgrade Apple.
Maybe it's just because of Larry Gervais's comments last night at the Golden Globes.
That was funny.
Oh, by the way, Matt, just so you know, I live close to Hollywood, and that made the headlines out here, and oil was like in the back pages.
Yeah,
that was more important.
The sweatshop comment in the monologue was in the headlines, and oil was on the back page.
That was more of a threat to our human life.
Oh, you guys in LA live a different life.
Apple in LA. You don't threaten Apple in LA.
hey, when the mighty Ducks, won the Stanley Cup, that didn't even make front headlines because Lindsay Lohan was being released from jail. You know.
It's about your priorities, Gino. It's all about those priorities.
Yeah, it's all about your priorities. Okay.
I mean, imagine that.
But Matt,
technically here, let's bring it back in. Technically here, guys, you're seeing a very significant whole number in 300 on Apple. You're seeing a little bit of hesitation, maybe a high base. The 90 EMA has caught up to it. Is that a buy above 300 for you guys in the face of the downgrade? Because I don't care, some random Wall Street analyst downgrades Apple. And based on what the market did today and when Apple recovered intraday, market doesn't care either that Apple got downgraded. 300, significant whole number, guys. We know how important those are to the market. Trigger above 360 cents. What do you guys, who's signing up?
Not me.
Don't fight it. Don't fight it.
I will buy a breakout pullback. If I got to break 300, then a pullback to 300, I'm buying.
If it's setting up, that's a nice trigger.
I think it's a nice trigger above 300. Mark, what do you say? You're on mute, bro.
He's tweeting.
Well, listen, we got a lot of people on mute because, doesn't Ricky Gervais, doesn't Hollywood wish they had a mute button last night?
Oh, yeah.
Oh, yeah. What's funny is I guess he doesn't keep up with the whole hurt your feeling things around here.
He doesn't care.
Listen,
that's
300
we need that.
is
we
a
need
huge
that.
psychological number.
We need
you
that,
have
'cause
a
I'll tell
nice
you what.
technical setup. You have a nice trend.
But I'm trying to calculate this, Matt. The market cap on Apple is 1.3 trillion.
1.3.
So in order to get to 2 trillion, which is one of the predictions this year, is they're trying to be the first $1 trillion American company, right?
What would they need?
It would have to go.
They'd need 420. There you go, buddy.
420. You already calculated it?
No, I just made that up. Same thing as Elon Musk.
420.
That was a jab.
It would be high enough. It would be high enough.
I can get you the THC joke. Okay. So yeah, I'm looking at 50% higher. 450 would actually have. That's a long ways. Will it do it this year?
It ran 80% this year. It's one of the strongest stocks in the market with the ridiculous momentum. And regardless of whatever was said in Hollywood yesterday, that trigger above 300, I do believe, is a psychological component. You have increasing momentum in everything called Apple. You have 5G coming out this year with new iPhones. I think there's going to be momentum coming into it.
I want to see a double top at 300 so the trigger's stronger above it.
No, it's like Coach Frank always says, give me another few days, right? Just hang out. Just hang out for another few days. Let it consolidate, then trigger. Let's see if Coach Frank gets what he wants on Apple. Bank of America upgraded here today also by one of the random Wall Street. No, it might have been actually JP Morgan. Not much to see here, though, on Bank of America. Just kind of, it's showing a little bit of hesitation, a little bit of a pullback. Do you guys see anything here technically?
Earnings is close. So you have to watch out for earnings, but it's a decent little pullback. I mean, it had decent momentum. It dropped back into the rising 20. It closed above that. So it went below it, but it closed above it. I think that you could reasonably take a trade, but you got earnings out here on what, the 15th or so. So you'd have to be in and out real quick. In that,
what's our personal rule on scatter reports? You got to have at least 10 trading days, right?
Minimum of 10 trading days, 2 weeks.
Minimum of 10 trading days. So you're tight there. I mean, what are we? We're this is today 5th or 6th?
It's 6th.
You probably don't have enough time. A couple other upgrades. Google.
We had Apple was downgraded, or not Apple. Google, excuse me. Google was also downgraded.
No, Google was upgraded.
No.
Yeah.
Oh,
Google was
from hold. Excuse me. They were upgraded.
Google was upgraded. Probably the number one reason why the market is showing internal strength on the intraday. Google's breaking out here, guys, showing massive momentum. No sell-off near the top of the candle. What's your technical read here on Google's upgrade, Noah?
We shouldn't have kicked it off of the options report this week.
I know. I thought the same thing.
It was one of the final cuts. It was one of the final cuts.
I thought the same thing.
Well, I'll tell you what I didn't like about it. I didn't like the little megaphone pattern that was forming, because whenever I see those little megaphone patterns, that's usually it can be a reversal. It can go either way, but when I see that megaphone pattern, it gets me worried about a quick reversal. But the fact that it's breaking out here above those highs, pretty good volume early in, for as early as it is in the session, that'll end up being above average by the time we're done. Can it close? If it can stay up here and close, you could start to trade that bar by bar, because it's got a good chance of running.
A lot of momentum. Hey, Coach Slavic, you're kind of the guy that kind of brought that bar by bar momentum to the scouting reports and kind of, play it candle by candle. When you say bar by bar, what do you mean specifically by that? Because we say it now all the time, right? On momentum. So what do you personally mean by bar by bar?
I'm an innovator. Bar by bar, let's say it opens.
Sounds like a pub crawl.
Right. Maybe that's why I came up with this. Anyways, bar by bar, if Google opens tomorrow and continues to rally, I would shove my stop right below the bar that's being created if I was happy with the outcome already. I trail bar by bar with two different scenarios: the previous bar or the bar that's being created. The more money I have in unrealized profit, the tighter the bar by bar gets. So in my case, I trade off of 2-minute charts, and let's say I made $500 risking 100 by trading, let's say, Google. I will dial into 1-minute charts to trail off of the minute bars, not 2 minutes. So as tight as you can get, you trail it bar by bar.
So basically, wherever the low of the day is, you trail the stop loss right underneath the bar, and you just play the momentum.
That's correct.
He doesn't like giving any money back to the market.
No. Slavic is historically cheap.
You know what's interesting?
Yeah, he won't give anything back. He's like, that's my
I say that as a compliment.
I didn't buy you a beer, Matt, because the bar was closed. Come on.
Last time that bar pub crawl on the World's End? Did you see that?
No.
World's End bar, the pub crawl. Did you see that?
I didn't.
Oh, that is a must. It's that English comedian where he doesn't care what's happening. He's getting to that next bar, and he has.
I think sounds like Larry Gervais.
Could be.
it was the same guy, the Shaun of the Dead. But that's definitely a must watch when you think of pub crawls. It's called Determination is the theme of that show.
Check it out.
Oh, it's life or death. It's a life or death situation. And also, Slavic, a big point you put in there that caught a lot of people's attention is you defaulted to the 2-minute chart. Is that your go-to for everything, or is that just
for day trading? Yeah. For day trading in the open, first 90 minutes, I use 2-minute.
2-minute, huh? Okay. Now, what made you find that out, and how many years did it take to figure out that was your?
As Noah remembers, I used to use 3-minute.
And you got impatient.
2-minute abs, 1 minute abs,
2 minutes. Yeah,
30-second abs.
I trade because I trade the reaction in the markets a lot. So the first candle, over or under the first candle, depends on how it opens in relation to, let's say, 200 moving average, and I either go short below 200 or long above 200 if the candle is tight. So yeah, by the time people I remember when I was teaching somebody my method, and the person said, "Oh, I thought that first 20 minutes the computers are trading only," and yeah, but the real people also trade, the open. So by the time somebody sits in front of the markets and try to figure out which way to go, I'm most likely done for the day.
Oh, very good. Yeah, because it's funny, you ask people, one of the questions I get from students is, when you look intraday, do you use a 5, 10, 15, half an hour? What do you use? Especially Forex traders. And a lot of times the people, I'll say, 5 or 15. They say, why? And I say, because that's what the brokers defaulted to.
Yeah.
To get a 2-minute, you have to go in there and actually play with it, look at it, back test it, and wonder why. So when you said 2-minute, that's very odd. That's not a very common answer. And that's the true litmus test of a day trader, is when they have their own bar chart. They have their own reason for not using the default. So that's really good.
Yeah. Well, that's, I was taught to use 2 minutes, back in my prop trading careers and stuff, and it sticked. I tried 3 minutes, but for some reason, it didn't work. If it worked, I would still be using 3 minutes. But
I was taught the same way from day traders. Don't go to a 1 minute or anything below a 5 minute unless there's volume there.
Yeah,
and you have to have a certain amount of volume to go lower.
So
Slavic trades very, very liquid type stocks and whatnot as well. So
yeah,
awesome point you made. I just wanted to note that.
All right, guys. Thanks. Well, that is the Tackle Trading halftime report for Monday. Did we agree that it's the 6th? Is that what we agreed to?
It's the 6th.
It's
feels like the 6th.
Although it says December 6th, 2020 on the halftime report there, Cody. So let's see if we can get that fixed. But guys, if you've enjoyed the show here today, guys, make sure you give us a nice little like and share. If you're not a member of the pro community, we put our scouting reports out there, all of our webinars, our systems out there as well. Get over there to tackletrading.com. Make sure you're and sign up for that 15-day free trial. If you want to get an annual membership, you can also email team@tackletrading.com and see what all of our other pro members absolutely love about Tackle Trading. We also had a podcast drop last week, the prediction podcast, and all of a sudden Gino looks very smart on oil, and everybody looks really smart on gold so far with those predictions. So we'll see it. So make sure you're you're listening to that prediction podcast. We have the Tackle 25 podcast coming out later on tonight. I also did a special coaches show last Tuesday with the pro community. Make sure and that was on New Year's Eve. So if you have not watched the unveiling of the Tackle 25 for the pro community, make sure you're watching that webinar. I went through every one of those stocks, talked about the fundamental nature of it very quickly. Just economically this week, we do have manufacturing PMI numbers coming out tomorrow. We have the unemployment report dropping on Friday. Those two reports are, I would say, top 5, top 6 economic reports. European economic reports came in stagnation, as they always have for the past 2 years. So nothing to see there. Guys, let's go have a great week trading. We'll be with you every day this week. We're out.